You ever feel like the market's about to explode, but you just don't know when or in which direction? That's where Bollinger Bands come in. This tool completely changed how I approach volatility. I used to rely only on support, resistance, and price action. But once I understood how Bollinger Bands work, it felt like the fog lifted. Let me break it down. Bollinger Bands are made up of 3 lines: a middle line, which is typically a 20-period simple moving average, an upper band, and a lower band, both calculated using standard deviations away from that moving average. The bands react to volatility. When the market is calm, the bands contract. This is called a squeeze. When the market is moving aggressively, they expand, showing that volatility is high. Now, here's where it gets interesting. One of the most powerful signals in trading is called the Bollinger Band squeeze. When the bands get really tight, it means the market is building pressure, like a spring being compressed. Most traders ignore this, but smart traders know that pressure has to release. A breakout is coming. So, here's the strategy. Step 1, look for the squeeze. Tight bands. Flat price. Low volume. Step 2, wait for price to close outside the band. This could signal the start of a breakout. Step 3, don't chase it. Wait for the next candle to confirm the direction. Then you enter. If price breaks above the upper band and keeps pushing, it might be the start of an uptrend. If it breaks below the lower band and gets follow-through, you could be riding a bearish wave. But let's be real. False breakouts happen. That's why I always pair Bollinger Bands with confirmation, either RSI or even just volume. If price is breaking out and RSI is leaving its range or volume is spiking, it adds confidence. Now, for a different style of trade, mean reversion. When the market is in a range and price touches the upper or lower band, it often snaps back to the mean, the middle line. This is where short-term scalpers make their money. Quick in, quick out. But don't make this mistake. Bollinger Bands are not a magic signal. You need to understand the context. In a trending market, price can ride the upper or lower band for a long time. So, if you're trying to fade a strong trend, thinking, oh, it's outside the band, I'll short, you're asking to get wrecked. Here's how I wrap it all together. Use the squeeze to spot potential breakouts. Use volume, or RSI, to confirm. Use the bands as dynamic support and resistance in ranges. And most importantly, use your brain, not just the lines. Bollinger Bands won't give you certainty, but they give you a framework to read the market's rhythm. The goal isn't to predict, the goal is to prepare. And with tools like Bollinger Bands, you'll stop chasing and start trading with calm, calculated confidence. So, next time you're staring at a boring sideways chart, check the bands. The market might be whispering, something big is coming,